Okay, so for like 30 years, the Pentagon basically had a kill switch on China. It is called the Malacca Dilemma, and honestly, it is a point of maximum systemic leverage. One naval blockade at this tiny choke point, and 80% of China's energy just gone. Lights out, factories stop, whole Chinese century thing over before it really starts. That was the theory anyway. Then, in July 2026, while everyone's glued to headlines about the Iran war, that kill switch just quietly stopped working. And here is the weird part. Oil should have gone to $300 a barrel. It didn't. Barely moved. Why? Turns out China has been sitting on 1.4 billion barrels nobody knew about. An invisible shield, basically. But stick with me because this isn't really about oil. There is a bigger, massive thing happening underneath it, a mathematical trap swallowing the dollar. The US is trying to do three things at once that just don't fit together: reindustrialize with tariffs, keep the dollar strong, and somehow service the biggest debt pile humans have ever created. Pick two. The third one breaks you. China has clearly done the math. That's probably why they pulled out of paper gold trading and are drifting towards something analysts call a neutral settlement price. We are talking 38,000 US dollars an ounce, which sounds insane until you look at why. So today I want to walk you through how China quietly went from world's factory to something closer to world's administrator, and why the decoupling you keep hearing about on the news might actually be a slow, controlled demolition. So to get how the kill switch died, you gotta look at what people call the energy ghost. China's biggest weakness forever was that it needed foreign oil. Control the sea lanes, you control China. That was the whole logic. While the West was busy talking about green transitions, China was just quietly stacking oil, silo by silo, dome by dome, 1.4 billion barrels tucked away underground. Then the Iran war hits in 2026, Strait of Hormuz gets choked, and everyone braces for global chaos. And China does something nobody expected. They actually cut their own oil imports by 5.5 million barrels a day. Not because they had to, because they didn't need it. They had their own underground ocean sitting there. And here is the twist that I think gets missed. By pulling back like that, they took pressure off global prices, which means China, the country supposedly decoupling from the West, ended up stabilizing the exact markets the West depends on. Quietly, no press conference. That's kind of a Saudi level move. Honestly, being able to flip 5% of global demand on or off like a switch. In 2024, long before the Iran USA crisis, China issued a 2 billion US dollars bond in Riyadh, right inside petrodollar territory. Think with less as a loan and more as a digital Trojan horse. They were testing the dollar system's settlement velocity, seeing how much liquidity could be moved outside of Western surveillance before a red flag was raised. That's pillar one of this whole global administrative hub idea. Malacca's neutralized. The kill switch isn't in the Pentagon's hands anymore. It is on Xi's desk. Meanwhile, there is a second quite a fight going on, the AI bubble. And I mean bubble because look at what the US is doing. Microsoft, Google, Meta, throwing something like 1 trillion US dollars at this. That's 3% of the entire US GDP, just brute forcing their way to the next breakthrough. China spent about $123 billion over the same stretch, just 0.6% of their GDP. Here is the thing nobody wants to say out loud, though. it is not really paying off for the US side. Expensive, power hungry, hard to monetize. A real royal problem. So, what does China do? They don't try to outspend anyone. They wait. Let the West do the expensive innovating, then they distill it. Kind of like chemistry, actually. Boil off the waste, keep the essence. She even said it out loud at the Waco launch. AI shouldn't be, quote, a solo performance by a single country, but a symphony of international cooperation. Which, sure, it's a line, but it is also basically the whole strategy in one sentence. And the number is honestly a little absurd. A task that costs a US company $2.33 to run costs a Chinese firm 31 cents. That's a 7.5x gap. Some analysts go further and call every dollar the US spends on AI research basically a donation to China, since it just gets distilled for free downstream. Which, okay, price is one thing, but there is something bigger going on too. Call it tap of risk. Back in June 2026, the US told companies to cut foreign access to their AI models, and it backfired almost immediately. France started walking away from American AI contracts because why would you build your house on a land where the landlord can change the locks whenever he feels like it? China saw that opening and built Waco, 29 founding members already. They are not just selling software here. They are offering something the Global South clearly wants, a tech order that isn't a leash. Which brings us to the part that honestly worries me most, the end of what you could call the fictitious economy. Analyst Luke Gromen calls it like the triangle of doom, and here is the cleanest way to see it. It's like trying to revive the engine of industry while a dead anchor drags the whole ship to a halt. You can gun the engine or fight the anchor, not both. They want aggressive industrial tariffs to rebuild the factory base. That needs a weak dollar, so exports stay cheap. But their debt needs a strong dollar, or foreign investors start walking. And they are supposed to keep inflation down through all of this too. You genuinely cannot have all three. Strong dollar to protect the debt, industry dies. Weak dollar to save industry, the debt starts to collapse under you. The trade numbers tell the same story if you are clinical about it. Trade between the US and China grew 13.7% in Q2 2026, right after a rough Q1 slump. Call it the final tether, the symptom of an entanglement neither side has actually cut. Even the China plus one strategy, shifting factories to Vietnam or Mexico, is mostly a numbers game. Parts, steel sourced from China, just assembled elsewhere to dodge tariffs. That interdependence isn't proof that demolition isn't happening. It is the mechanism China is using to make sure it stays controlled instead of chaotic. Because China is watching the debt trap regardless and clearly thinks the US is stuck. 20 straight months of the People's Bank of China buying up gold like there is no ceiling. Then, on July 24th, 2026, they shut down retail paper gold trading entirely. No more trading contracts for gold that doesn't actually exist in a vault somewhere. Just the real thing now. Why does that matter? Because gold is the one neutral asset SWIFT can't freeze or cancel. And there is this number floating around BRICS central bank circles, the price gold would need to hit to actually settle trade without leaning on the dollar at all, 38,000 US dollars an ounce. That's not a prediction, by the way. It's more like the math just requires it if you are building a gold settle system from scratch. So, is China saving the world here? Not exactly. No. China is a factory that figured out it can't function if its biggest customer, the West, falls apart too fast. So they stabilize energy, undercut AI pricing, and basically keep the whole system running long enough for BRICS infrastructure to actually take over. Less saving the machinery, more like quietly taking over the maintenance contract on a system they know is dying. Malacca is neutralized. The AI monopoly is being sidestepped. And now they're quietly cornering the one asset that's outlasted every empire that's ever collapsed: physical gold. China isn't just a superpower anymore. It's becoming the administrator of the whole system. So the real question isn't whether the old order is ending. That's whether you are actually ready for what replaces it. Drop your take on that $38,000 gold number in the comments. Genuinely curious what you all think. I'm Anastasia, and here is why we do this every week. We track these money flows, these energy deals, these diplomatic signals, because when the system switches from credit to productivity, the people who see it coming first are the only ones who make it through the transition intact. That is Global South geopolitics, not as a sideshow, but as the main event. No spin, no slogans. If this kind of tracking is worth something to you, the support for Think BRICS comes straight from people like you, not companies or interest groups. A super thanks or a coffee on our Buy Me a Coffee page helps keep it that way. Details below. Thanks for watching.